So what I did here was bought the close of uh, bought the close here. Put a little marker there. Bought the close here, and my thinking was we're starting to get a bit outside of this trading range that we've been in, and right after a bull bar here, follow through bar closing above all prior highs, and then another follow through bar closing much farther above all these prior highs. I thought a breakout was likely, and if the market was going to come back into the trading range, then we'd probably see signs that it was happening first and be able to just take a small loss. So I did was put my stop initially just below that bar. And I suppose in theory you could put your stop way down here, like way below the range, and scale in. But I'd rather just put it right below that bar. And if it goes below it, then the breakout's probably going to fail. So that would give us an early sign that we're wrong. And so bought the close with the plan of getting out, maybe 20 points higher. And so that's what we're trying to do here. I went ahead and moved my stop up below this bear bar. It's kind of looking like a double top. Also looking like a wedge with this first push and then a pullback, second push, pullback, third push. So, possible wedge, possible double top. So I was going to get out below this bear bar if the market went below it, but it didn't, and we got this bit of a nice move up there. Now it looks like this is a larger wedge that's formed. This bar still has 2.5 minutes, so it might end up reversing back up here. But so definitely if this becomes a big bear bar, I'll go ahead and get out below it. But the main kind of trade I do is the trades that I point out in the daily trade reviews. It's where I trade much larger and I go for like a scalp basically. So an example might be like buying above this bar, right? Normally I'll risk about 5 points and I'll try to buy above it and I'll go for 5 points. And about 5 points is about the most that I want to risk if I'm just scalping like that on like a full position size. But while I'm waiting for those big, trades, then I'm kind of doing little things like this. Just trading micros or an individual Emini. Possible breakout. My stop had to be far, more than, it had to be 12 points here for buying this close. So I'd rather just trade really small and, not worry about it at all. So while I'm waiting for the bigger trades, like the scalps I point out on the daily review, then I'm kind of doing these smaller trades where, this is a breakout and I'm pretty sure we're going to have more up. And if we don't, I should be able to get out quickly and not take much of a loss. So, I'll do these little trades like that and to kind of keep me busy. So 8 seconds left. It's going to it might have a big tail on the bottom. If it does, I'm just going to leave my stop where it is. And okay, so it's a perfect doji bar. Closed right at the open. All right, so this is that doji bar. It's a trading range in a bull trend. So there'd probably be buyers below that. I don't want to move my stop any lower. I think I should just leave it where it is. So not enough to get out below. So I'm expecting there still to be more up. An issue is that we are starting to get far from the moving average. And, this is not exactly above average buying. So I definitely want to be, if I can get out up here, then I'm definitely interested in taking my profits up here. I'm not trying to hold on anymore. I have a measured move target here from the low of the opening range to the open, and then do a measured move up of that. And oftentimes you'll see the market do that. So it'll double whatever this opening range is. So I'm getting out a little bit before that. So I bought this close, and let's say that, see, we did get a pullback here, and that was a bit of a concern to me. I usually will let the market come back one time, and then if the market comes back a second time, then I'll get out. So if this bar had been a bear bar, I would have gotten out below that, but it didn't. It ended up being a doji, so that wasn't enough for me to get out below it. And we see the market did pull back, but then ended up going higher. And kind of for the same reason, I would have gotten out below this and just taken a small profit, because this would have been a second attempt back and double top. So I would have gone out below that, but the market didn't go below it. So I'm fine and got to stay in it. Another reason I was okay with staying in the market through here was because we're above the 200 moving average now. So we broke out above it, and we pulled back, tested it. So in fact, that's more of a bullish sign. It's a breakout and a retest of that support level. It's resistance as the market's moving up. It's resistance when it tries to get above it, but then once it does, then it becomes support. Seems like now we are in the bear. We're in the channel phase of the market cycle. So market cycle has 3 phases: breakout, which probably be this here, and then it goes into a channel. And then at some point that channel turns into a trading range. So we've been in a trading range. Then how do you exit a trading range? Well, you get a breakout, and then breakouts lead to channels, and then channels lead to trading range the majority of the time. So based on that, I don't want to put my stop too tight, because I don't want it to be stomped out at basically the bottom of this channel and the market continue up. So I'm going to leave my stop where it is, and if that gets hit, then that's that. But this is where I'm looking at. Probably this is the breakout, then we're going to be a channel. And either in the channel phase or as it transitions to the trading range phase, we should be able to get out with a profit at our level here. So another bull close. That's good for the bulls. It's probably okay to move my stop a few ticks below this bar, lock in more profits. I think perfectly okay to do. I'm just going to leave my stop here, and probably if we get a strong bear bar, I'll just get out below it. I want to pull up this. Tomorrow's Wednesday. It's the FOMC announcement. So I like using Polymarket because it gives us the odds of what the outcome will be. So Polymarket has a no change. Almost certainly there'll be no change to the interest rates from tomorrow. So what that means is that probably won't be too much movement from the FOMC, because everything's already priced in. The market's known for a month now that it's almost certainly going to be no change to the interest rates. However, let's say that 1% event does happen. Either interest rate decreases, or for some reason they increase the rates. Well, then that would be quite a shock. The market would have to react to that pretty aggressively. But 99% of the time, it's going to be no change to that tomorrow. Now, you can't just look at what the change is, because you have to also know what Powell is saying in his statement. So yes, maybe there's no change, but there still could be movement if he says there's no change now, but on future on future statements we expect the rates to decrease faster than we were previously expecting, or we're not going to lower them as quickly. So if he says that in one of his statements, then that would impact the market. And looking back at the December FOMC statement, if I recall correctly, the what the statement was as expected. However, what Powell said was that rates would decrease slower than expected, which is what created this huge sell-off and then a couple more legs down. So not expecting to change tomorrow, but you got to watch out for what Powell says in his statement. And, I think we learned our lesson there, because like they said, what was expected happened, but then it was what he said in his statement that really spooked the market there. So getting a pretty large bear bar. I'm going to go ahead and move my stop above it. It's unfortunate because we could be at the bottom of a channel up here, but I think the risk of this being a wedge overrides that. I think a lot of bulls will go ahead and get out below this, and so I do expect this stop to get hit now because of that. So breakout channel, but it could be the end of the channel here with this wedge forming. So I always respect wedges. I'm never going to try to fight against it because it's a reversal pattern. So if the market comes down here, I'll just go ahead and get out there and take a 9-point profit. So while I have a video recording, I wanted to talk about Nvidia and DeepSeek. So check it out. Nvidia shares tumbled 17% Monday, racing $589 billion from the company's market cap. So that is the largest one-day stock drop in history. A stock has never dropped more in terms of market cap than what Nvidia did yesterday. That is a huge drop. And here's the Nvidia chart. All right, so they went from in the 140s down to 120, a little bit less than that. So for the company that's basically the largest company in the world, that's a huge drop. All right, so we got our 9-point profit there, and so that's what I'll kind of do when I'm waiting for my stronger setups to form, is especially when the bars are large like this. It's kind of not really optimal for the scalping that I like to do. So I usually am confident on what the market's going to do. So I'll just take a small position and I'll just, take it, and I'll just manage it as necessary and kind of collect a series of small wins throughout the day. I don't normally re-enter immediately if I just took a loss. I think, I didn't take a loss here. It was a profit, but I don't normally re-enter once I've just exited a trade. I think it'd be reasonable to try to get short below here. I kind of feel like I'd rather wait for a second entry short, get another attempt up that fails, then get a bear bar. I'd rather short below that. We still have room to the moving average. There's a chance that this here is just going to end up being a failed breakout of this range. I mean, we're high enough. We've already doubled the size of the range. So, I think, there's a chance we could end up pulling back into this range, and if you do sell below here, try to go for profit 50, 60 points below. I think that's reasonable to do. Your odds aren't too great, but the risk reward ratio is great, and you'd probably have to sit through some close calls here and it almost stopping you out. But I think that would be a reasonable swing trade. The only issue with that is, do you want to lose that often? I mean, sure, it's great when you do win, but probably more than 80% of the time you're going to be getting stopped out here before it comes down here. And having a large loss rate like that, it's I don't know, even if it's profitable in theory, it's difficult to take losses so often. And on the flip side, if you take a high probability trade, let's think of think of a high probability trade. Buying here, buying the close of this bar, that's a high probability trade. We have a very strong bull bar with follow through. High probability we're going to get at least a little bit more up. So maybe this is more up, and then here's more up. So high probability you're going up by buying that close. Now, it's high probability, so maybe you get to scalp 80-90% of the time. But when you do lose, your stop's down here and you lose 40 points. How happy can you really be then? Even though you're winning most of the time, when you do take the loss, I imagine you're not going to have a very good conversation with yourself. So on these kind of tail events where your probabilities are either very high or very low, you need to make sure it's okay with your personality type. Because selling here your win will be great, but you have to lose a lot of the time, and how happy will you be losing 4 days out of the week, to make it up on the 5th day? Or how happy will you be winning 4 days out of the week, and then having on your Friday, then you lose 40 points and give most of it back. So that's why I prefer to do more of a scalping strategy where it's kind of more in the middle. And this is one of the trades I had marked on the review yesterday, selling below this bear bar or below this bear bar and putting your stop above. And the odds are more like 50-50 or maybe 55%, and 55% chance you'll be able to get a few points out of it. So you're winning a little bit more than half the time, and what you're winning is a little bit more than what you're risking. So it's kind of more of a consistent flow of wins and losses, and you're never really risking all that much. So no one loss is going to be that much, and you're going to be winning about as much as you lose. So you're never going too far in one direction. You're never getting like too excited, too happy, and you're never getting too upset from having a big loss. So my thoughts on where it is right now. We're trying to get a third bear bar, and of course that would be good for the bears. I think for me to short, I'd rather see it stay below this level, this resistance level, and then try to retest it, and then get below the moving average. And then at that point, I'd be interested in looking for shorts. Because for now, what it could be is just in a trading range. And, something like this. And I would rather not be buying low in the trading range. I mean, I would rather not be selling low in the trading range and selling into these moving averages. So I want to see more attempts up by the bulls that fail, and then I'd be interested in getting short. So I think I got out at the right spot, right wedge, and clearly the market's proving that was the right place to exit our longs there. And so I don't expect to take any more trades too soon, so I'm gonna go ahead and end the video. But I hope that made sense what I'm doing here. As I'm waiting for the large trades that really change the math for me, I'm kind of taking these smaller trades where I'm fairly sure what the market's gonna do, and I can manage my way out of it if it's giving me trouble. So like buying this close, it's a good chance we're gonna have a breakout up. So I'll buy the close, try to get a swing up, and then if the market gives me a reason to exit, then I'll just go ahead and get out and take a profit. So that's kind of how I spend my days, and just kind of wanted to make a little video and show you guys some. All right, thank you guys.